Focusing on the markets once again, bringing on board Rupesh Patel from Tata Asset Management. Rupesh, hi, good afternoon. Thank you so much for chatting with us on Markets at Lunch. Let's talk about the banking space right now. A lot has happened this year, not only in the PSU banking space, but also on the side of the private banking space. But just keeping it with ET Now's exclusive story, which we broke this morning regarding 7 PSU banks getting funding infusion from the government. How are you reading into the entire PSB space? Are there any banks you think which are actually doing well going forward, which are likely to improve upon its asset quality and overall performance?
So historically our view has been more positive on private sector banks as compared to public sector banks, because our belief is that if you look at private sector banks, then they have relatively handled NPA cycle better as compared to their PSU peers. They are well capitalized, and the PSU banks biggest advantage in terms of their CASA franchisee. Over a period of time we have seen that they have been losing market share to their private sector peers. We believe, considering the fact that private sector banks are better capitalized, are run by decent managements, they have good ROA, ROE in general, and are increasing share of low cost deposits. So as a result, having a better liability franchisee over there, we continue to maintain our positive stance on private sector banks. But we believe that if we look at the steps taken by Reserve Bank of India, central government, and also the resolutions which are happening or in the pipeline under the aegis of Insolvency and Bankruptcy Code, we believe that we are close to the bottom of cycle as far as NPA recognition is concerned, and in next few quarters credit costs should normalize very sharply, leading to significant earnings growth coming to corporate lenders in particular. And hence we are positive more on corporate lenders at this point in time. Maybe few large PSU banks can also be a beneficiary of this bottoming out of NPA cycle.
When do you see things improve when it comes to earnings growth? Because that is going to be the key driver for markets, at least in the near to medium term. Do you see the pain ease going forward for corporate lenders, whether it's private or public?
Yeah, because as I said, with the bottoming out of NPA cycle, we would see that for banks across the board, particularly for large corporate lenders, credit costs would normalize very sharply, and this is going to be a big contributor for even market level earnings growth in not only coming quarter, but for few quarters going ahead as well. Apart from banking, we believe that consumer consumption as a basket looks good, because over there, whether rural or on the urban side, demand has been holding up pretty well. So that's going to be another thing. The recent correction in commodity prices, in particular crude oil prices, should lead to improving margins for some of these companies, which should be visible in Q4. Then that can also be some kind of contributor to earnings growth going ahead.
Hi, this is Nayantara joining you from the New Delhi studio. You spoke about consumption. I wanted to get your views on the fact that 2019 is going to be an exciting year for a lot of reasons. Of course, you've got elections that will increase consumption, but it will also mean a lot of new advertising revenue. You've also got the 2019 Cricket World Cup, and just because the time difference between England and India, the timings are going to be favorable, as opposed to when these matches happen in Australia or West Indies. So given that, would you say the media entertainment stocks, despite the disruption, despite the big data story that's planning out, could get re-rated in 2019? Would people like yourselves look at that from this perspective?
No doubt, media is a very exciting space, and it's kind of a proxy play. I think in the segment we have to take very stock-specific view. We should not forget that there is big disruption which is also going over there in terms of OTT plays coming there. So no doubt India still consumes lot of content on television. So I don't think media companies are going to get disrupted so fast. Nonetheless, the disruption which is there in the form of OTT is something which we need to watch out for. Though some of the media names do look exciting considering the valuations, considering the kind of corrections which we have seen in some of the names, but I think we'll have to take very bottom-up view or stock-specific view in the segment.